Welcome to TradeTheMBI.com. This is John. The support is for the 16th of October. Well, no surprise, the MBI white lead, and sure enough, they're still fighting it back. I mean, we get these rises up, but overall finishes lower. No shock with that. Kind of reached a equilibrium here on DOC when you compare midterm and shorts here in the cyan versus the green. Green is still above red, so there's still plenty of support that's been taking place. It's no coincidence that we're coalescing here around that previous algo at the 43.22, but not all that negative. I mean, yes, there are a lot of headwinds from world news, and of course, it only takes one incident of an expansion in the Israeli conflict to really send things into overdrive. That can, if there's a massive push in oil because something happens, that's just going to really put a lot of pressure on the market as well as consumers in that. So we're already seeing some of those cracks, but within that, things are still holding on. From an NQ standpoint, you can see that turnaround is a little bit softer relative to the S&P. So the S&P is kind of taking the brunt of it, but that's kind of not too shocking given the fact that we've seen the NASDAQ be the leader throughout the year for the most part, but it also in the accelerated decline did not suffer as poorly and never really went down to that full extreme fill at this particular time. It's not ruled out because you're really not that far away. So we always keep that in mind and just wait for the signaling. From a treasury standpoint, again, flight back into treasuries, certainly decreasing yield marginally, but not significant enough to really make a difference. At the end of the day, if oil and that spikes, it's really going to be tough for the Fed to hold its stance, but they are for now, and without any material changes, they're not going to do anything differently. You can see the rebound in oil, and as those jitters go, you're going to end up with this where they're buying the rumor, and obviously you sell the fact that nothing takes place is the ideal situation, but it's a tough one because any additional supply constraint is certainly going to put a lot of pain into the situation. But even at these levels, you're still already looking at an aggravated CPI situation that isn't going to be abated anytime soon. And from a euro standpoint, of course, that's going to continue pressuring the euro if oil rises. And there's no surprise there. It just gets to a danger spot here if you reach back to that 104 because there's just no real reason it would even be at this level, let alone you throw in added problems with having to get oil. And of course, it makes it more expensive as the euro declines even more. So it's like a progressive whammy, as they might say. It just keeps piling on. No shock there. Gold, massive. And this is what we expected from gold within that. You would get these fade offs, and then it's just a one time is all it takes. And you've erased all the decline from before. And we knew that there was just a matter of waiting for it to finally explode because it made no sense why it was taking as long as it was. But, these are the machinations. Now, that also caused a nice spike back in Bitcoin. So finally, a little bit of symmetry between those, gold and Bitcoin returning again. Far slower from an ETH standpoint, just not even anywhere near the same enthusiasm. And that's kind of an interesting bifurcation for all those that thought that Bitcoin was going to go by the wayside in favor of ETH or some of these others, just not materializing. From an ES standpoint, we reached that 50K, and boom, once it dropped below, and that took place right about there from an MBI reading standpoint, and then you get the rejection from a DOC where cyan breaks up and the green breaks lower, boom, and we came all the way back down to fill the positive extreme setup from before, right around that. It was just a fraction higher, but I always look for around 80% of the fill. The low was 43.40, so within 3 points from that significant a move, and just not that complicated. It's something we look for all the time. We can look at it from pre-market action there. We had the giant buildup, and then as soon as the cash open came, all they did was refill the positive extremes and ended up with excess supply. And when you start triggering some of those stops, well, they keep going until there are no more, and then they start doing their slow accumulation, and that's what happened towards the end of Friday, and then literally they brought it right back up. And this is where we're at right now as we reached a peak, which got basically towards that 50% pullback up. They've started to sell into that. And we've been in, well, it was plus almost 15 and now negative. So certainly world events definitely playing into that effect. And I think that's going to create just some unique volatility, but I'm still not seeing abject fear or anything like that. At least from an algo standpoint, everything's been pretty orderly. As always, though, I'll continue to update you on Skype chat. Trade well. Have a good one.